This is a straightforward software comparison. An AI voice guides the walkthrough. When it comes to pricing, Charles Schwab positions itself as a low-cost, mainstream brokerage designed to remove most visible trading friction for everyday investors. Listed US stocks and ETFs trade with zero online commissions, which immediately puts Schwab in the same pricing league as most modern discount brokers. Options trading also carries no base commission, but there is a per-contract fee that applies on each trade, which becomes noticeable for active options traders scaling volume. Mutual funds through Schwab's OneSource platform can be traded without transaction fees, while non-participating mutual funds may incur purchase charges. Bonds and treasuries are generally commission-free online, with pricing built into the spread rather than shown up front, which simplifies execution but reduces transparency for more advanced traders. Futures and futures options are available, but priced per contract, making Schwab usable for derivatives, though not aggressively priced for high-frequency trading. Account-level costs are where Schwab becomes particularly appealing. There are no account opening fees, no maintenance fees, and no minimum balance requirements across most brokerage and retirement accounts. This makes Schwab extremely accessible for beginners, long-term investors, and retirement savers who want flexibility without worrying about penalties or inactivity charges. For managed investing, Schwab Intelligent Portfolios offers automated portfolio management with no advisory fee, though a cash allocation is required, which indirectly affects returns. Premium advisory services introduce percentage-based management fees and higher minimums, clearly separating self-directed investors from wealth management clients. Feature-wise, Schwab delivers a broad, all-in-one investing ecosystem. Users get access to stocks, ETFs, options, mutual funds, bonds, treasuries, CDS, futures, and international markets from a single account. Research tools include market insights, screeners, earnings data, portfolio analytics, and third-party research integrations that cater well to fundamental investors. Schwab's trading platforms are stable and beginner-friendly, focusing more on reliability and clarity than aggressive customization. Mobile and desktop experiences are clean and consistent, with strong customer service backing through phone, chat, and branch access, which still matters to many investors. The strengths of Charles Schwab are clear. Pricing is simple, predictable, and beginner-friendly. There are no hidden account fees, no pressure to maintain balances, and excellent support infrastructure. Schwab excels as a long-term investing hub, retirement platform, and diversified portfolio manager. However, there are trade-offs. Active traders may find options and futures pricing less competitive than specialist platforms. Advanced charting, automation, and strategy testing tools are more limited compared to professional-grade trading platforms. Execution speed and customization are solid, but not designed for high-frequency or systematic trading. Schwab is optimized for stability and breadth, making it ideal for investors who value consistency, trust, and long-term portfolio management over short-term trading edge, especially those focused on wealth building rather than rapid trade execution. Plus500 takes a very different approach to pricing, operating as a CFD-focused trading platform rather than a traditional investment brokerage. The platform advertises zero commissions on trades, meaning there are no explicit fees for opening or closing positions. Instead, Plus500 earns primarily through the buy-sell spread, which is embedded directly into quoted prices. When you open a trade, you effectively pay the spread rather than a visible commission, making costs simple on the surface but highly dependent on market conditions and instrument volatility. There are no deposit or withdrawal fees charged directly by Plus500, although third-party banking or payment provider fees may still apply. Currency conversion fees are charged when trading instruments denominated in a currency different from the base account currency, and these conversion costs are reflected in real time within unrealized profit and loss. An inactivity fee of up to $10 per month applies after extended periods without logging in, which can penalize inactive or long-term hands-off users. Overnight funding fees also apply to positions held beyond a specific cutoff time, making longer-term CFD holding significantly more expensive. Plus500's product offering focuses heavily on CFDs across shares, indices, commodities, forex, options, ETFs, and crypto derivatives, depending on regional regulation. Futures trading is offered in limited regions using micro-futures contracts with fixed per-contract pricing applied on both open and close. From a feature perspective, Plus500 prioritizes simplicity and execution speed. The platform offers real-time price quotes, dynamic charts, technical indicators, risk management tools like guaranteed stop-loss orders, and a clean interface designed to minimize complexity. The demo account is a major strength, allowing traders to practice strategies with simulated funds before committing real capital. However, the platform intentionally avoids deep customization, advanced analytics, or social trading features, keeping the experience streamlined and focused on short-term trading execution. Plus500's strengths lie in ease of use, transparency of basic costs, and accessibility for short-term traders who understand CFD mechanics. The absence of explicit commissions and the availability of a robust demo environment make it appealing for active, speculative trading. The downsides are significant for long-term investors. Spread-based pricing can become expensive during volatile markets. Overnight fees accumulate quickly, inactivity fees penalize passive users, and the lack of true asset ownership makes it unsuitable for retirement or long-term portfolio building. Looking at third-party sentiment, Charles Schwab currently holds a 1.6 out of 5 rating on Trustpilot, based on 646 reviews, with complaints often related to customer service experiences and administrative processes rather than trading functionality. Plus500 holds a much stronger 4.2 out of 5 Trustpilot rating, based on over 17,000 reviews, with users frequently highlighting platform simplicity, fast execution, and a strong demo trading experience. As always, Trustpilot ratings should be treated as directional sentiment indicators, since reviews tend to reflect extreme positive or negative experiences rather than average long-term usage. Final takeaway: if your goal is long-term investing, retirement planning, and predictable, low-cost access to real assets with institutional stability, Charles Schwab is the clear winner. If your focus is short-term, active trading with leveraged exposure, fast execution, and a simplified CFD environment, Plus500 is better aligned with that strategy. The right platform depends entirely on whether you're building wealth steadily or trading price movement aggressively. If this breakdown helped you choose the platform that actually fits how you trade and invest, hit like, subscribe for more honest platform comparisons, and click the link below to access the software that matches your strategy, risk tolerance, and trading style.